Have markets found their peak in the short term? Hi there everyone, welcome to the weekly market update. Today's date is the 26th of April 2023. Now just before I get into it, you need to be aware that any advice in this presentation is general advice only. It doesn't consider your personal financial circumstances, and you have to decide if what I'm saying is appropriate for you. So today guys, we had the release of the Australian CPI data for the first quarter. CPI is often taken as a measure of inflation, and today's CPI actually came in pretty strong. So Australian CPI growing at 7% year on year. That was versus 6.9% expected, so the headline rate was slightly higher. However, the core CPI data, core CPI growth, came in at 6.6% versus 6.7% expected. So the core CPI data came in slightly lower than expected. Now the market jumped on the back of this announcement, and the reason for that is that the RBA has stated many times they look at the core CPI. And so the market said, oh, core CPI lower than expected, you know, that's great. That basically means that inflation is slowing. That means that the RBA is paused. That means that they're going to continue to pause hopefully from here. And I think that's a bit silly from the market. I think we're getting a bit ahead of ourselves, because CPI or inflation is still more than double the target range. Now the the pace at which CPI is slowing is also slowed. So the RBA has paused, and CPI, yes, it's coming down, but it's starting to slow in its descent. Now, does the RBA really want to take a chance that CPI stops falling? And I think that that's a very, very risky thing for the RBA to do. So the market's got in its head that the RBA is not going to make any change next Tuesday when they meet for the May meeting. And I think that after today's data, there's definitely still a chance we see a 25 basis point rate rise. Not according to the market, but I think if you think logically about it, the RBA has to consider another rise. So that's going to be next Tuesday, 2:30 Australian Eastern Standard Time. This CPI data, probably for me at least, is enough to justify another rate hike. The other thing that I think is worth mentioning is that Australian unemployment has been extremely low. In fact, the last unemployment read came in way lower than expected, and that's another inflationary signal for the RBA. If inflation was, or CPI was high in a vacuum, or maybe they could consider continuing to pause, but all the other economic data is continuing to come in strong. It's pointing to inflationary pressures. On top of this, you've got the Australian dollar remaining very weak against the US dollar, and the effect of that is that imported inflation is higher. So when we buy products overseas, and we use Australian dollars, they're relatively more expensive in Australian dollars as well. And if the RBA continues to pause on rates, that just weakens the Australian dollar further. So I do think that there's a bit of a chance next Tuesday of a rate hike, and that's despite the market not really pricing in much of a chance of that event at all. In fact, after today's CPI data, the bond yields all fell, and the market is not pricing in much of a chance of a rate rise next Tuesday. The other major event we've got at the moment is US company earnings reporting. So far that season's been relatively positive. It is worth noting that earnings season is always pretty positive in the US. About 70% of companies beat their earnings expectations. This season I think it's slightly higher than that average in terms of the beat rate. But where there have been misses, there has been very strong selling. We saw that overnight with First Republic Bank falling 50% on the back of some disclosures around their deposits and withdrawals. And we've seen a few other large sort of catastrophes on reporting. When you set up a scenario where the majority of companies consistently beat earnings expectations, suddenly a beat isn't always enough. So yes, they've sort of doctored the system, the analysts and the companies over there have doctored the system so that their results always look good. That's led to a scenario where people basically say, well, we know you're probably going to beat, we want to see more. And so in some ways they've sort of stymied themselves. People aren't stupid. Markets aren't stupid, investors aren't stupid. So earnings season so far has done enough to keep them at their highs, but I don't think it's been good enough to push them any higher. And we'll have a look at the charts just quickly and see how they're going. So this is the US S&P 500, and earnings season started, right back sort of towards the start and middle of April. And yes, the earnings season was enough to keep them at their highs, but it wasn't enough for them to hold this post Silicon Valley Bank uptrend. And we can see that they found resistance around 4160-ish on the S&P 500. They've also formed a bit of support at around 4070-ish, which they tested overnight. And so currently they're trading between a support and resistance level. Now, if they do break this 4070 support level, I think you have to look at the 4000 level as a potential downside target. Nice round number. Previously a bit of resistance, potentially a bit of support historically as well. It's also where the 100-day moving average is. And so if this 4070 level breaks, the 4100 level will be my first target to the downside. So like I said, reporting has been good, just good enough to help the US markets hold their highs, but it hasn't been good enough for them to break into fresh highs, hasn't been good enough for them to hold the short-term uptrend they'd formed. So now we're just waiting to see where the next move goes. For the Australian market, we've also broken our short-term upwards movement. If you recall in my video a few weeks ago, I did say that we were going to play a bit of catch-up, and catch-up we did, but now we've also run out of a bit of steam. Found some resistance around 3070 and just potentially just trying to break a bit lower. But we still keep holding that sort of 7300 level as support. For our market, there's key levels every 200 points. So if we do close below 7300, every 100 points I should say, if we do close below 7300, I'm looking at a move back to 7200. I think a move lower in our market is more likely than not. And I think, fundamentally there's every chance we should move lower. Inflation is still high, bond yields are still high. I think the market is underpricing the chance of further RBA rate rises. And then going beyond that, you've also got really, really weak iron ore prices, and the prices of many other commodities are falling as well. So this week, as a little look at the stocks, I did want to touch on the major iron ore miners. They've all fallen back to key support levels. But iron ore is trading at a very low level. Iron ore is trading at levels not seen since October, November last year. And let's have a look at what all these iron ore stocks were trading at that time last year. So BHP got down to $37, now trading at $44. Fortescue got down below $15, now trading at $20. And Rio got down to about $89, $88, now trading at $112. Now, I'm not saying these iron ore stocks are going to come all the way back off to those levels, but I would just be cautious trying to pick a bottom on these iron ore stocks because iron ore prices are very weak in the short term. All right, guys, that's it for this one. Markets are looking a bit toppy. Will we see some selling come in? If you have a view, let us know in the comments below. Otherwise, just click like and subscribe, and we'll see you in the next one. Bye for now.